Good evening. This is the Elliott wave update for the S&P 500 for Monday, May 16th, 2022. Not very much to be adding today. The S&P, along with the NASDAQ and the Dow and the Russell, basically traded in a box today. The moves were reached early. In fact, I believe the S&P also put in its high within that first hour and spent the balance of the day basically just trading sideways in a tight range, now ending up right at 4,000. It's right at its minor comfort zone. The major comfort zone lately has been 4,100. And while there remains possibility that we can get up there, we're going to talk a little bit about what's going on, which is not major changes. But again, just updating that. So here on the daily chart, there aren't any changes to make. The moving averages remain in alignment to go down. The 4 did this little obligatory hook higher as it broke above the 8. It kind of just tried, but didn't quite get there. And now the market's going to try to end it back up and try to give that a little push. Now, what is all this continuing to tell us? That we remain within that minute wave 2. If we're continuing to mark this low as the wave of minute wave 1 of this minor third, then we're looking to complete minute wave 2. It continues to be held by the hourly 200 moving average. And that is the same in the NASDAQ. So both are being held. And the 200 is slightly declining. It's flat, but with a slight decline to it as well. As whereas like here it was at 39, now it's resting at 42. So this wouldn't have been 39. It would have been much higher. Of course, it's going to there. Never mind. In any case, it is sloping slightly lower. Now, if we are still within this minute wave 2, which I suspect that we are. So in other words, what I kind of see in the picture, let's see if I can get this without it going fritzing on me, is that we have an A, excuse me, an A, B, possibly a C for the B wave, and then we do go back up. So yes, we can come down and put in a small C wave, which will take us down to 3980-ish, maybe as low as 60, 3960. I don't think so, but it could. And then we turn and we do make that run for at least 382, the retracement being 38% of that initial drop down. So minute wave 1. So it's going to be a 38% retracement of minute wave 1. And that would be an absolute minimum. So if it comes in lower, that's just again demonstrating that the trend is down. The weakness is going to be on the buy side. And what happens is if this is just all fluff because of some pundits putting the news out, it's like, well, it's a slow week. The market's going to go up. We're really oversold. We need to put in a bounce. We have a rally. We can get ourselves back up to 4,600. I've been asked that question. And I'm like, really? Why? What's changed? What's going to produce it? No, I don't know. Just, it's just going to happen. Really? Okay. So enough people buy into that, but we're all just kind of standing around waiting. You're all looking at each other going like, well, you're going to take it up higher? I'm not going to buy anymore. I'm already long. Okay. So the weight itself can pull it down. In the absence of additional buying that can push us up there, it's just telling you that the sellers are there and they're waiting. They're waiting until this is done because they're going to make their statement, and it's going to be, some of the orders are being filled here, but when the buyers are done, they will move it to that next value level. That's what I'm talking about. So when it's done here and it decides to slide and it comes below this hourly 50, it's moving to the next value level. And that might be down here closer to 3852, which will continue to be support for right now. Ultimately, if this is done and we're going to pick up in a minute third wave within the minor third wave down, 3852 should not be a problem. If we go from where we are and we just break and we smash through 3852, this second wave is over. And we're dropping in that minor third wave, minute 3 of minor 3, for that matter, of intermediate 3. So we are quickly getting back to that point. That's when we'll have some good trading again, because it'll be very directional, it'll be easier to read, and there will be more acceleration, et cetera, et cetera. So corrections, they're not fun. In inside days, which is basically what this was, it raced up, that was it. We didn't exceed yesterday. We didn't create a new low. So it's just like inside day, boring. Chop moves with sudden bursts higher and lower, sometimes back to back. So it's a more difficult day to trade. In fact, it's the day where you're just like, I don't want to be involved, and you leave it up to somebody else. So tomorrow, if this internal B wave can clean itself up, then I would look for a resumption of the upside. And it's going to break cleanly. In order to do so, it needs to break cleanly above 40.42, which is where the hourly 200 is sitting. And as you can see, that has been resistance. It was challenged today, and it failed. Now, if it's going to go, it's got to break above it. Otherwise, it's got a little bit more B wave, right? A, B, C, B, or A, B, 1, 2. We get the third, which should take us above that moving average, and it should be more convincing if indeed it's going to be a third wave. Okay, I'm going to finish it there. Our upside, we have potential to break above 40.42. In fact, if that occurs, I'd be looking for 41.34 and possibility for 42.21. Downside, if it starts to break 39.79, and then you're looking for this just price support 39.60, and then it can head very cleanly down to 38.52. If minute wave 2 is complete and minute wave 3 is in force, that's going to be easy to break. So that's where I'm going to leave it. And our next update will be on Tuesday, May the 17th.